Does this regulatory development alter Korean financial institutions' compliance obligations or business model economics?
Well, that is the multi-million-dollar question today.
It's Wednesday, June 24. Let's break down what's happening in Korea's financial sector.
Yeah, and right up front, this discussion contains no investment advice. We strictly analyze systemic regulatory trends here.
Right. So whether you actively track the hashtag KOSPI or you just monitor global financial systems, you really need this context.
For sure. Projections show 935,800 individual hitting financial delinquency status by the end of 2025.
Wow. Wait, that is massive.
Yeah, I mean, that marks a 28% spike from 2022. Distressed borrowers face severe market inefficiencies right now.
Right. And private law firms charge these borrowers up to 4 million won for debt restructuring counseling. That is roughly 2,900 US dollars.
It is highly predatory.
Especially since the State-backed Credit Recovery Committee provides the exact same service for a flat 50,000 won fee. That is about 36 US dollars.
Exactly.
I mean, it is like hiring a luxury concierge to get you into a free public park. And then they force you to take out a high-interest loan just to pay their fee.
That analogy actually nails the mechanics. Law firms require clients to exhaust 100% of their credit card limits to pay that 2,900 US dollar retainer.
Wait, what if the cards are already maxed out?
Then, the firms funnel these clients into separate fee loans. These loans carry a 20% annual interest rate.
Oh, wow. So they trap them further.
Yeah. The Credit Recovery Committee initiated a formal cross-institutional regulatory confrontation against the Korean Bar Association over this.
So, are major Korean banks changing their business models to adapt?
Banks aggressively launch inclusive finance tools to preempt new regulatory standards. NH NongHyup Bank recently enrolled over 104,000 seniors in free voice phishing insurance.
Wait, free. The bank absorbs the premium entirely.
Yes, they do. The policy covers 70% of direct losses up to 10 million won. That is around 7,100 US dollars per incident.
That is fascinating. Shinhan Bank applies a similar strategy to lending. Shinhan Bank launches a 6.9% capped mid-rate loan for the bottom 50% of credit scorers this August.
Right. They sacrifice profit margins on those loans to align with compliance expectations.
And the Lee administration mirrors this push. President Lee Jae-myung removed the 745 billion won budget ceiling on the Cheongnyeon Future Savings Account. That is about 532 million US dollars.
Yeah, the government mandates supplementary funds if youth applicants exceed 3.2 million.
Does this regulatory shift increase compliance risk or reshape profitability conditions for Korean financial institutions? The explosion of 935,800 projected delinquents has triggered a massive crackdown on predatory debt counseling. This transforms consumer protection in Korea from a mere PR buzzword into a strict compliance metric that directly alters institutional profitability.
Right, exactly. If the government writes blank checks for youth savings and regulators praise banks for absorbing fraud losses, how long until these inclusive best practices become mandatory operating costs for any financial institution doing business in Korea?
Something you definitely need to keep an eye on. That's today's AI Prism Finance Daily. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a One Eye Off Array award-winning series. We'll be back tomorrow.